Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Well, everybody, it's Friday. We are back with another edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. For those of you new to the channel, do me a favor, click that subscribe button and the notification bell so that you get the updates as we put them out there. For those of you that are not new to the channel, do me a favor, leave a like, leave a comment, leave a smiley face, leave whatever it is you need to leave on the channel so that people know that you're alive. All right, let's go ahead and dive right in. So yesterday we had no DMC because we were in our live trading room inside of TradersArmy.com, which worked out to be a really good day on our live trading room day. So hopefully those of you that were in there were able to catch some of the trades that we looked at in the class, and I'll review a couple of those here. But really, we talked about the fact that yesterday the market bounced off of our previous daily market commentary level. So if you were one of those that was able to catch that level, do me a favor, leave a comment down below. Let me know if you were able to catch this long off of this area. Now, we got a nice little bounce off of that level and continued to move up. And yesterday we said, you know, the next time we come back down into this region, our buy area would be a bit lower, right? Because we traded partially into that level. But we haven't. We've not come low enough down to really give us an entry on that. And yesterday in the live trading room, we talked about this area right here being a potential for a reversal, but that the trade wound up being a little bit more clean in the NASDAQ. And so we'll look at the NASDAQ level a little bit later as we got a nice little move away from it. But we were able to hit the opposing demand, and then poof, we've rallied higher. Now, as we've rallied higher, I would normally say, hey, we've got a little level right here to wrap our lines around, but this green candle here with this long wick already has tested it. So if you look at this area, a lot of people would wrap their lines around this area. I'm not going to. The reason I'm not is because price went all the way up to here at some point. You know, we at least know we opened here and then traded back down into the area and then shot back up. So to me, this level is no longer valid. We traded all the way to the bottom of the level. So I'm actually going to come a bit lower, and I'm going to come to this area here. Now, I'm cutting through a candle, but I want to go look at it on a 15-minute chart because essentially I'm looking at the lower wick in this area. So here I see a drop, base, and a very strong rally. Why do I call this a drop, a base, and a very strong rally? Well, because this upper wick represents a drop. So what I need to do is take this area and really just wrap it around the front part of this zone. That long upper wick is where our drop is represented. And so I will just use essentially the front of this level. Now, this is on a 15-minute chart. So we know that 15-minute levels give us slightly lower degrees of probability. So I change the color to purple, okay? Now, for those of you that aren't used to our coloring, the way that we color the different levels, we actually have a tutorial built on what those are. So if you go to TradersArmy.com and you go to the free trading videos, underneath our free trading videos, you'll see that we actually have an entire course just on drawing the lines on the charts and really what do the different colors mean. So if you're not familiar with why we draw blue lines, dashed lines, purple lines, green lines, go take a look at that. That might help you. So, all right, next, let's look at the NQ. So in the NQ, the level that we talked about yesterday was this area here, but it was a confirmation style entry. Now, if you look at this from a confirmation style entry standpoint, we got a nice move into the level and then a very nice move away. A little bit of that 2-to-1 reward to risk, hit the opposing fair price value level before then rallying back higher. So now what am I looking at? Well, same exact level that I looked at in the S&P. I'm going to take this little level right here and wrap my lines around it. Now, the time of day of this level is not great. This is not a great time of day. We're looking here at about 8 o'clock in the evening, and 8 o'clock is not, the most opportune time of day, and so you may or may not want to use that particular level. Always remember that time of day is a pretty important piece. So you may or may not choose to take this level because of the time of day that it was created. If you're a little bit more, concerned about that level, you could certainly make it a confirmation style entry. Those dashed line trades are really designed for that. So that's our level in the NQ. Now, crude oil, I will say yesterday in crude oil, I anticipated a reversal at this level here. I thought we may get a little bit of an opportunity to get short as price kind of rallied back up into this region, but we actually just continued to go right through it. Now, this was a lower probability trade in the first place. I mean, look at how many times we chopped around sideways, and we just didn't get a whole lot out of it. We gave it a little touch and down, and it was a lower probability setup in the first place. Now we've kind of continued to march higher. If I go to the 4-hour chart, we'll be able to see that we're definitely, we had put in that lower swing low, but we and a slightly lower high. But ultimately, it's still, I think we're going to get a little bit of a pullback. This would be a good buying area, so I'm going to hold off on much there. In gold yesterday, we had a nice entry. We had talked about these tweezer tops, and price actually had come down off those tweezer tops, gave us an entry. Those tweezer tops had hit right at this supply area. A lot of people in the trading room took that as a short. Let me know if you're still in that trade. It actually came down to our opposing demand area. And if you got long, well, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candlesticks where price did nothing. So remember that you're sometimes going to have those, and if you follow the 6 candle rule, then that's not that big of a deal, right? So now we're coming back down to this 1300 level. Now, this 1300 level is the area where we had a rollover gap that had occurred that is still acting as a bit of a price magnet. So if you are, still want to get in on this, the 4-hour level that was up here is now the hourly chart, and that's really the old demand becoming new supply area where you may get another bite at the apple to go short. I would actually argue just a little bit for the level above, and I would say this level here is slightly better. Reason being is it's a little bit more of a wick over wick level, and it's a little bit less obvious. Sometimes I want to look for those levels that are a bit less obvious than these right here. Doesn't always work out that way, but just something worth considering. In the bond market, so in the bond markets, we had taken a look at a demand level down here. As this gap area had moved through, price came into this level and then just plowed right through it. As we are definitely seeing some weakness in the bonds. Now, yesterday we looked at the combination of the 30-year and the 10-year together, and saw that the 30-year was more bearish than the 10-year note was, which actually is bullish for the economy in general, right? It's bullish for the economy in general when we see that occurring. And so there's a couple of areas down here where we think price can make it to. I've got to look a bit higher now for an area of supply as a place to get short, since the market has definitely given me lower swing lows and lower swing highs. And so at this point, your best level is going to be this area up here as far as structure, but as far as time of the day, you might actually look to this wick over wick level in here. So you got a couple of different opportunities. From a structure standpoint, this one's pretty good, but the time of day gets a little bit hairy. And then from a time of day standpoint, your level up here is a bit better. Now, that level up here, which is a bit better from a time of day standpoint, is also a bit wider, and you take a bit more risk in that position. So for me, I'm not really looking at either one of them as super high probability opportunities. And in reality, this is a little bit of a retest of a breakdown, so that one's a bit better. In the Aussie, we are still between major levels of both demand and supply, and so we're kind of holding off on most of our Aussie positions. I know a number of you caught this short. So those of you that caught this short, we had heard from a bunch of you that caught this short, which was a nice little touch and go level. We're starting to rally back up. We're into a wick over wick area right here as we speak. So if you're more aggressive and you want to take a candle to candle short, this could be setting up for a good opportunity actually right now. In the euro, I looked at this little level as a potential for a reversal. We came right down through it. It just did not hold up at all. Didn't feel like it was a super high probability setup anyway, and as it was a retest of all those other levels to the left. Canadian dollar. Now, the Canadian dollar, what we had done was really taken a look at on the 4 hour, the fact that we were just in this kind of chop around zone and there wasn't a whole lot of movement going on. Now we're in an upward trend, but our upward trend is definitely waning momentum. So if I throw my momentum studies on here, momentum studies, I'm going to throw my MACD on there. You'll see that my MACD is getting significantly lower while my highs are relatively the same. Now I have higher lows going in with this. This is a bearish setup. This is traditionally a pretty bearish setup. Now we could break either way, but just keep an eye on this. It's traditionally bearish. Doesn't mean that it's definitely going to be. So just keep an eye on that one from a momentum standpoint. Last but certainly not least, as we head out into the weekend, are our levels in Great British Pound and Japanese Yen. Our Great British Pound level that we identified earlier this week, price has still not gotten back to that level. We've actually seen a lot of smaller candlesticks over the last few days. Our candlesticks have really gotten pretty tight. This is a very tight area to begin with. I know a number of people took this breakout trade, which worked out pretty well. And then the Japanese Yen level that we're looking at is the one up above. Although we are definitely more bears than bulls, we need to make sure that we get the right high probability entry. And none of our levels, unfortunately, have been retested. It's been a breakout market. A lot of people took the breakout short that we had a while ago. If you're still in that thing, leave me a comment. Let me know down below. So overall, I think it was a pretty productive week. We had a fair amount of market chop, but there were a couple of days with some decent trades in there. One of the things I would always caution people to do is just holding things over the weekend, in the world of futures. In the world of options, we do those things all the time. And for those of you that trade options, we talk a lot about options trading. Go to tradersarmy.com to learn more about our options trading and what it is that we do. Until next week, I will talk to you soon.